Good afternoon, everyone. Today is Thursday, March 11th. I'm Donna Will, Professional Development Coordinator for the Developmental Disabilities Administration. We welcome you to our webinar presentation, How Maryland ABLE Can Help Provider Agencies to Support People to Save Money Without Jeopardizing Benefits. This session is being facilitated by Betty Ann Mobley, Director, Maryland ABLE. Before we begin, I'd like to go over a few things about the webinar. All participants are in listen-only mode. There are two options for listening to the webinar, by computer and by phone. And if you have trouble hearing, you may try switching by clicking on the appropriate button on the audio section of the webinar panel. There is one handout available for download, and you can find it in the handout section in the panel on your right. They can also be emailed. We will be recording the session, and a link will be available on YouTube, and it can be shared upon request. We're going to wait to take questions at the end. You can type in your questions in the chat box or the question box located in your panel to the right. So that's all we have for housekeeping. And now I'd like to introduce Betty Ann Mobley. Good morning.
Thank you. Good morning. How are you?
Good.
Well, it's so wonderful to see so many people on this call. As I was scrolling through the list of participants, I see some folks that are part of my past in my working with DDA and working with the provider community here in Maryland, and some folks that we've been working with more recently with ABLE. So it's exciting to be able to present this presentation to you folks. I'm really glad that you all have taken the time to join me this morning. Timely to have this presentation as the newest version of the stimulus package has just been passed. The American Rescue Plan Act was just passed through the House and Senate, and it looks like President Biden will be signing that, I think, today, if not tomorrow, and we'll be moving forward with the latest stimulus. And so it's very timely to be able to talk about this particular topic and present this information to you. So I'm really so thankful to have this opportunity to spend time with you today. So let's move forward and
Hey, Betty Ann, your mic went out.
Yeah, I don't know. It keeps muting me. I've been unmuted and muted again. So we'll keep watching that. Thanks, Donna.
Okay.
My guess is that most of you have some basic knowledge of ABLE, so I'm not going to do our full ABLE presentation. What I'm going to do instead is I'm going to do some really quick information about ABLE, and we're going to just go over that very quickly so that everybody comes in with a level playing field. As we know, with ABLE, the person with the disability is always the beneficiary and always the owner of account. So even when someone else comes in to help them manage the account, they will never be the owner of the account. It will always be the person with the disability. It is a program that is limited to people who have acquired their disability or had their disability identified by their 26th birthday, which is something that we really don't have to worry about in the DDA community, because by the nature of the fact that people are receiving services through DDA, they are automatically qualified through our provider community. The other thing that is really important to understand is, and sometimes people don't understand this, they think that the contributions can only be made through SSA payments or Social Security payments or leftover monies from SSA. But for folks who have active family members or friends, it's important to note that the money that goes into an ABLE account can not only come from money from the person, but can be made from other people who are involved in the person's life, or anyone who wants to make a contribution to that account in terms of those standard contributions that go into the account. And I'll clarify what a standard contribution is in just a minute. Another really huge benefit is that the money that goes into this account has the opportunity to earn interest or dividends on the money depending on where it's been placed, whether it's in a cash account or an investment account. And the money, while it's in the account and earning that money, doesn't get charged taxes on the interest or the dividends earned while it's in the account. And when it comes out of the account, it also doesn't get charged taxes as long as the money is used on what are defined as qualified disability expenses, and those are expenses defined by the person. And probably the most important thing for people that we serve is that while the assets are in the account, when money is transferred from outside of an ABLE account into an ABLE account, it becomes a protected asset. And so in the lives of the people that we support, it is so important that we help them to maintain those benefits. And ABLE has been established as a plan that helps to protect those assets. And so while in the ABLE account, the money is not counted in determining the qualifications or the for means tested programs. So it becomes a protected asset. And that becomes really important today for folks related to things like their SSI benefits, that $2,000 cap that we have to worry about, those Medicaid waiver limitations we're now worried about, HUD, energy assistance, food stamps, and things like that. And so as we look at SSA, we go from a $2,000 limitation up to $100,000 in that account before there's any impact on the cash benefits of Social Security. So it's really a huge benefit for us. And when I think about what's happened for the lives of people with disabilities, as well as all of us really in the past year, the opportunities for spending money has been significantly impacted and limited. And on top of that, we've been in a world where there have been these stimulus payments. So thinking about getting a stimulus payment almost a year ago that came out, I believe that was a $1,200 payment. And then in December, there was another payment. And now we're about to have many people receive another $1,400 payment, which for providers who are supporting folks in trying to maintain that $2,000 limitation with their assets can be extremely problematic, as I can imagine. In addition to that, when we look at what the stimulus packages have done in helping to support people through this, many people that are supported by you as agencies have, for the first time ever, received unemployment benefits because of the changes in the way that unemployment benefit eligibility was determined. And so all of a sudden people were receiving unemployment benefits and additional monies in unemployment benefits, which was again compounding the amount of money that people were now having in their bank accounts and having to figure out ways to leverage that money without having to go into that dreaded spend down and still maintain those benefits. So what we want to look at is how is it that we're going to be able to help people save that money, and how does ABLE account help them? The Able to Work Act gave people the opportunity to not only save that $15,000 in terms of standard contributions, which can come from any person, but for people who were working to be able to contribute additional monies. And the Able to Work Act said if people were working and were not able to participate in some sort of retirement plan from themselves or from their employer, so they were not having contributions made to a standard retirement plan, that they could contribute to an additional amount of money to their ABLE account. That amount of money was limited to the amount of their gross income for the year, and up to an amount that was equal to the previous year's federal poverty level. Again, we can't make anything easy. Got to be a little bit complicated. And I wanted to let all of you know who have people in this category that for this year, that's $12,760 extra dollars. That $12,760 doesn't have to be their earnings. It can be any money that is the person's money. It just has to be money that is limited to the amount of money that is equal to their gross earnings for the year. Now, we had some providers who were looking at contributing those unemployment benefits for someone who had previously been working in this area of Able to Work. While unemployment benefits can be contributed or deposited in an able to work contribution, there's a caution that I need to share with you. And that is, while it is the person's money, and if the person has worked, it can be contributed as an able to work contribution. But remember, able to work contributions are limited to the amount of gross income for the person for that year. So if the person is not working currently and you didn't anticipate that the person is going to work this year, then theoretically they wouldn't be able to make able to work contributions. They would only be able to make standard contributions, that $15,000 contribution to their account. If they're not working now, but we anticipate they are going to go back to work, and we anticipate they're going to make $3,000 or $20,000, then they would be able to make able to work contributions up to that amount, that $12,760, or their gross income. And the unemployment benefits that they're getting now could be contributed to that amount. Now that probably sounds completely confusing, and I totally get it. It is. But I just want to caution you, because we did have some providers who got confused by that and were putting those unemployment benefits into that able to work contribution bucket for people, and then realizing that they weren't making any money, and now it couldn't be counted in that able to work category, and they'd already filled up that $15,000 standard contribution bucket. So we had to return that money, and then that was going to be counted as an asset. So I really wanted to get that information out to you as providers, so you didn't end up with a bulk of money coming back that couldn't be accepted in the ABLE account any longer, and that would affect those overall assets. So remember, you have $15,000 that resets every January 1 that a person can contribute to their ABLE account, can come from any source. If a person is working and not contributing to a retirement plan, and their employer is not contributing to a retirement plan, they have the opportunity to contribute the amount of their gross earnings up to $12,760 this year, in addition to that $15,000. If they're working and have some gross income in this calendar year, and at some point during this year, they also get unemployment benefits. Those unemployment benefits can be deposited as an able to work contribution or as a standard contribution. Now I'm going to take a second and pause and ask if there are questions about that, because I know that is very confusing. Please go ahead and type those into the questions box if you have questions there. I don't see any questions. I know I couldn't have done that good in explaining it.
I see one question. One person said they thought stimulus money doesn't count against SSI.
Okay, so stimulus money and unemployment benefits are two different things. Okay, and stimulus money I'm going to talk about in just a minute. So hold that question. There is a caveat into when it does count against SSI. So let's just hold on to that question, okay? Let's talk about what are qualified disability expenses as ABLE defines them. Remember, ABLE defines qualified disability expenses as, let me just get rid of these things. I don't know why they're showing up on my screen here. Qualified disability expenses are things that support the person in health, independence, and quality of life. That is a very broad category. And so they have further defined in the law these particular categories to help people to define them. But remember, we don't approve qualified disability expenses. That is dependent upon the person and those people who are supporting them. It is person dependent because it is something that you look at as what supports this person and their disability. There are so many things that are appropriate for any given person. And when I think about people that I have been in the business of helping and supporting over the time in my career of almost 40 years, I think of so many different things that have helped people. Think about the number of things as providers that folks are currently paying for that Medicaid is no longer covering. Maybe there were copays on medications, certainly the age-old dental costs that people are having. And then I also think about things that we may not have considered, like gym memberships that are helping people maintain good health or range of motion, or things that are helping them with their posture or body movement and those kinds of things. Those might be considered qualified disability expenses. When we talk about education, that doesn't have to be at a college or a university. It might be things to learn a trade. It might be things to learn a craft so that you might be able to set up your own business. It might be things to learn a skill so that you can develop new relationships. Those are all kinds of things. When it talks about employment and training support, there might be things that you need to support you in your job that you don't get reimbursed for through the waiver that you need, and you can pay for those things. And in transportation, it might just be transportation like Uber and Lyft, and bus passes and things like that, that again are not supported through the waiver. So these would be expenses that are not supported through current government reimbursed expenses. Basic living expenses could include things like your cell phone or your cable expenses, your groceries, and things of that nature. And certainly assistive technology and support services would make sense for folks. Financial management and administrative fees, people might be getting a huge settlement and need to also have a trust to go along with it, because the ABLE account can only accept $15,000 a year. And so in order to set up a trust, you might need to use a lawyer and pay for those costs, and that could come out of this. Expenses for oversight and monitoring. I remember in a presentation I had done with people on the go a year and a half ago, a gentleman said, I only get so much nursing service from DDA, and what if I had exceeded that and I wanted to stay in Ocean City for an extra weekend? Could I pay for those additional nursing hours out of my ABLE account? And the answer was yes, because that's certainly a service that he needed. And then the nice thing about an ABLE account is to remember that these accounts do not close down after the person has passed away, but can be used for funeral and burial expenses, and to continue to pay for expenses that were previously committed prior to the death of the person. So let's say that there were medical expenses that bills had not come in yet, those things could still be paid for. So I think about the number of times that when working in an organization, there were costs that came in for a person that were not covered by their Medicaid insurance or other kinds of things that as a provider we had to cover. And the person had been in a situation where 3 months ago there had been more than $2,000 in assets, and through the team process there'd been a planning of spend down, and so the person didn't have money, and so as a provider we had to put forth the money to cover that expense, because that was our obligation as the provider, and the person was then in a situation of having to owe the provider money because we had to pay for that dental care or that medical cost, that medication that wasn't covered. An ABLE account now provides the person with the opportunity to put that extra money aside rather than spend it on that new TV or recliner or bedroom furniture or wardrobe that they really don't want or need, but is being used to just protect their benefits, so that they have it when these kinds of costs and expenses come up. And it also prevents the provider from having to put out money that is needed for the person and is necessary for the person, when they just spent money that they had to spend in order to maintain benefits. So it gives this person the opportunity to maintain their benefits and yet have money in the future when they really need it for things that they need. So these are the important things that you need to keep in mind about ABLE. Is it only takes $25 to open an account, and that is the first $25 in the account for the person, not a fee. And it is only $10 to deposit after that. So that is the minimum deposit. It's not a huge minimum afterwards. There's a $35 prorated fee after for an annual fee. It is charged to the account directly at $8.79 per quarter. It comes directly out of the account, but it only starts when the account is open. So to open the account today, it would not be a full $35 annual fee. And there are additional asset-based fees based on the investment options. So you'd have to look at our disclosure booklet for full details. We do have a prepaid card option, and there's a $1.25 monthly fee on that prepaid card if that option is selected. It is a prepaid card, not a debit card. So someone is not able to wipe out the entire account. It kind of operates like a gift card. So you are able to load on the card, it's a Visa card, how much is wanted for the person to have access to, and then they're only able to spend the amount of money that is loaded on the card. Some providers and parents who have who are supporting people with ABLE accounts utilize this card in a way to give people opportunities to have access to funds, be able to learn to use their money without risking them using all of their money, and to help teach them how to use money, because it is an opportunity to limit the amount of money that they have access to at one time. So if you're teaching someone to budget, this might be a great way. As a provider, in the past, I know the complications sometimes of people wanting to get money from their account, and the complications of requesting money and sending money requisitions to an office, to have checks processed, to have checks cashed, to have cash sent back to homes, for people to have it for weekend activities and things of that sort. Not that a lot of that's gone on this past year, but as we move out of this quarantine kind of situation. And this prepaid card option is something that could very easily happen without all of those paperwork processes, by merely having a transfer to this prepaid card and having that access be available fairly quickly to folks. As I've said before, there's this $15,000 annual contribution limit and the $12,750 able to work contribution limit if people qualify. I talked about the $100,000 at the point at which SSI cash benefits are impacted. And so just let me remind you that how that works is, once the account balance reaches $100,000 in an ABLE account, SSI will go into a state of suspension. The nice part here is it is an indefinite state of suspension until the amount comes below 100,000. Now let me explain to you that it's 100,000 in SSI, in the ABLE account for SSI, but you still have the opportunity to have $2,000 outside of ABLE. So it's really a $102,000 limit before SSI cash benefits are impacted. When that money comes below that $102,000 balance, SSI would immediately kick back, or would automatically kick back on. And what you need to understand is, if you don't have an ABLE account and your assets go over $2,000, as you well know, those benefits gradually decrease until they're suspended. And outside of ABLE, when your account is suspended, there's a maximum 12-month suspension period. And once you exceed that 12-month suspension period, a person is disenrolled, which means you would have to reapply. And once the person is disenrolled, you lose Medicaid. The benefit here with ABLE is, once it's suspended, it's never disenrolled. And not only are you never disenrolled, you never lose your Medicaid based on the suspension within ABLE. So that is a huge benefit for people with ABLE accounts. I also need to remind you that with an ABLE account, once the balance in the ABLE account reaches $500,000, we can no longer accept contributions. The ABLE account can continue to accrue interest and dividends, but when it goes below $500,000, we can then again accept contributions. And I can't wait till our first account holder reaches $500,000. Another benefit that Marylanders have is anyone who contributes, that's you, me, or any person who contributes to an ABLE account, can take a tax deduction on their Maryland state taxes up to $2,500 for the amount of their contributions to any ABLE account. And I tell everybody when I do an ABLE training that if I ever win the Powerball, I'm going to make a $2,500 contribution to every Maryland ABLE account holder so that I can get this tax deduction and they can have that. So let's get into how ABLE accounts interact with the economic stimulus payments. So the ABLE accounts give people greater flexibility as it applies to these stimulus payments, because the stimulus payments do not count against the assets, but they have a time limit in terms of how long. And we're fastly approaching that time limit for the stimulus payments that came out last April. So it gives you more time to decide how you want to spend that money. They provide you with greater flexibility because they extend the time frame in which you have to spend that money. The impact money doesn't have to be spent the same way that the SSI money has to be spent, because it is a totally different source of the money. So it doesn't come from the Social Security Administration, it's coming from the Department of Treasury. And so the same rules that Social Security has about how you have to spend SSA benefits doesn't apply to the stimulus money. And it's important to remember that the stimulus money gets to spend however the person wants to choose. The thing is that if it gets deposited into an ABLE account, then you have to use it the way that the ABLE account says, and that it has to be used for qualified disability expenses. As I said before, there are very few limitations to a qualified disability expense other than it needs to be spent for the person. They can't be just buying presents for other people with that money. It has to be spent for the person to support the person. So that's the only limitation that gets placed on it within ABLE. Really important to understand is it doesn't cause the SSI benefits to be spended for 12 months. So that's the caveat that you all need to remember, is that a stimulus payment does not impact SSI benefits for 12 months, but whatever is left of that stimulus payment after 12 months will count towards the asset limit if it remains in a regular account. If it's deposited into an ABLE account, it's not going to count towards your SSI asset limit unless your ABLE account balance exceeds the $100,000 and you have over $2,000 in your regular assets outside of ABLE. So that is the benefit of putting some of that money in your ABLE account. It doesn't have to happen right away, but let's think about that. If you're supporting people who have not only been staying home, so they've probably not been spending a lot of money and their assets have been accumulating, if they're someone who did get the initial stimulus check, they got the second stimulus check that came out in December, and they're about to get the stimulus check that is coming out, the $1,400 through the American Rescue Plan Act that just got approved, then there's going to be even more money coming. April, I believe, is when the last checks were issued. So April will be the 12-month expiration, and any money that wasn't spent from that initial payment is money that is going to then begin to count as an asset towards that SSA $2,000 asset limit if it is remaining in an account outside of an ABLE account. Are there questions about that? Donna, I don't see any. Do you see any questions on that, Donna?
On which topic?
On the stimulus payments.
Someone said, sorry, but the 12-month non-penalty timeline for the stimulus payments item doesn't totally make sense. You say whatever is left over will count against, but that money gets intermingled with existing funds the moment it is deposited into a regular account.
Mm-hmm. So you're right, it does get intermingled into a regular account, but they're going to ask you about that money and how much of that money is stimulus money. So if you have stimulus money and it is still out there, it's going to count towards the assets.
Okay. We have another question. How does the stimulus payment affect MA redeterminations?
In terms of your DDA redetermination?
Yeah, I'm thinking that's medical assistance.
Okay, it's going to be counted as an asset. It's going to be counted as an asset after 12 months. So same with Medicaid. So the 12-month grace period applies to Medicaid. And so it's not counted as income when determining eligibility for Medicaid coverage. After 12 months, it's counted as an asset, but not before. So the question, when it says it doesn't make sense, it's commingled. That means if that money is left at the end, anything that's left in that account, that if your account goes over $2,000, then it's counted. It's counted as an asset. You can't say, well, that was my stimulus money. The reason I'm over $2,000 is because $800 of it is left over from my stimulus payment. That's why I'm over $2,000. That's what I'm saying there. Okay. So you can't, you can no longer say, like up to this point, you might have been saying, well, the reason we're over $2,000 is because $800 of this is stimulus money. So that's why you haven't seen a reduction in benefits. And it hasn't counted against you.
And the person thanks you. they said they get it.
Yeah, okay, yeah.
Okay, how can they distinguish the difference between stimulus funds received in April versus stimulus funds received in December?
It's going to be up to you to show how those monies were spent. Like if you're going to claim now that this is money, you know, I'm guessing you're going to have to show this was the stimulus money. Here's how we spent this money. If you're going to continue to claim that those overages are stimulus monies, it's going to be up to you, between you and Social Security, to determine how you're claiming that stimulus money as an overage. And you can avoid all of that by just moving it into an ABLE account. You won't have to worry about it.
I think this is I think you've touched on this. If you deposit a stimulus check into an ABLE, do you need to include and report that money saved to Social Security for a particular report period?
You don't have to report deposits to Social Security at all, because we are directly connected to Social Security in that Social Security gets an upload at the end of every month for all ABLE accounts.
Okay.
They will ask you if you have an ABLE account, but you don't have to report deposits to Social Security at all.
Okay, I don't see any more questions about the stimulus.
Okay. So think about people who, you know, the expanded unemployment benefits of the $300 per week have also been extended, and they've been extended through April 6th or September 6th as part of this new stimulus package. So that's another thing that people are going to continue to see coming in if they were getting unemployment benefits. I don't know if any of you experienced people who didn't receive their stimulus monies and are looking at how to go about getting that. I do know that if you go to irs.gov, there is a panel on there that says recovery rebate credit, and it gives you instructions on how to get that if people didn't receive it, because they are entitled to that. There were some people that I have heard didn't get it that were eligible to get it, so there is a provision in there for how to get that. and it is important that people get the money that they were needing to get. So it's just important for us to remember that anybody who's receiving those SSA monies or SSI monies are subject to the SSA rules, and they only have 12 months to use that economic stimulus payment. So 12 months before it becomes a countable asset, unless it goes into an ABLE account or some other asset protection account like a trust. So it's really important. And, you know, with all that you guys have done, and I just need to stop and pause here for a second and say, I am so appreciative and in total awe of you as providers and all that you have been through and all that you have done to support people in this unbelievable time we have been through during the last year, and continue to work to do to support people to be safe and to stay healthy. So to talk about adding on all of these financial challenges of making sure that people maintain their benefits and stay safe and stay healthy, my utmost thanks goes to you, and people can't say enough how much you and your staff do. So to have to deal with this and worry about how to make all this happen and stay in payment status has got to be just one more thing to add on top of all the other things you do. And the reason I said it's so timely, because as I said, April is the expiration for this first 12-month period for the first stimulus payments. You got it. There was another that came in December, and now there's getting ready to be a third stimulus payment. So I wanted to make sure that providers were well aware of the fact that ABLE is an opportunity to kind of take that off of your thought process. If people are wanting to have ABLE accounts, that gives you the opportunity to also know that people have a way to protect those assets and not have to worry about the spend down process, and have money available when there are things that they want and need, and not worry about the provider having to be there and provide. Which brings me to this program that we've designed. And when I was scrolling through and looking at the people who were attending, we actually have a couple of providers who have engaged in this process with us. So I wanted to just recognize a few of them that I saw on there. I did see Irene from ARC of Northern Chesapeake, and I saw Ben from ARC of Baltimore County, ARC of Baltimore, and Natalia from Center for Social Change. And this is our entity as ALR. So why look at entity representative payee authorized representative situation? When we first started this program, people said to me, well, as providers, we serve as rep payees, and can we not just help people with their ABLE accounts as the representative payee? Social Security has allowed us to assist people. Well, ABLE accounts involve stocks and bonds and trading, and so we require a legal status to support somebody. And so we can't just allow representative payees, which is merely a Social Security status, and that status only gives you the ability to manage Social Security funds. Now, many of you may have seen the final IRS regulations that came out on ABLE, which lists rep payees as a potential authorized legal representative for ABLE accounts. And on a national basis, we have been looking at these regulations. Ultimately, it comes back to the state regulations, and in our state, rep payee does not have legal status over anything other than the legal status that Social Security gives to them. And so we were forced to look at how to provide this opportunity for providers. And we came up with this entity as ALR process. And what it does is it gives the agency the opportunity to serve as the ALR, the authorized legal representative. And by doing so, it eliminates the need for a single person to be named as the power of attorney. The power of attorney is the actual agency. And that way, as staff come and go, you don't have to continue to change that power of attorney. And it also eliminates it also increases the opportunity for the agency and the staff who are supporting those folks within the agency to be able to get reports that show for all the people that they're supporting those transactions to log on and to be able to stay in that record and not have to log on and off for each agency. So we really wanted to be able to establish this process. And the process is where we take and we look at the agency, we make sure that it is a valid agency. You know, since 9/11, there are a lot more rules that through the Patriot Act that require that we ensure that people are not on the watch list and that people are not involved in money laundering or terrorist activity. So we have to make sure that it is an established agency and make sure that people truly are who they say they are. But the agency is established as an authorized legal representative through some paperwork that we file with our program manager. And then we have the agency appoint specific staff through the documentation that they support or that they submit to be the people who are the ones who interact, who do the withdrawals and deposits on the account and manage those accounts to help people with their ABLE accounts. And again, we have one ARC who has 162 accounts. So instead of having to do each one of those, they submit a spreadsheet to us once or twice a month, depending on how often they want to do that, so that they can make sure that people are not over assets and make sure those accounts stay where they need to so that they those resources don't exceed the $2,000. Once they do that first creation of an account through a paper enrollment, those accounts can very easily be created online, and all they have to do is get that power of attorney, which again doesn't cost anything. That's just a notary. And then the transactions can occur online 24/7. The deposits, the withdrawals, if they use the prepaid card is again a 24/7 access. It's just like a credit card statement. We have a call center. The call center hours have just gone back to normal. So they're open from 9 a.m. to 8 p.m. Monday through Friday. There's also a chat function. And then reporting on a monthly basis, there's a report that is issued, and that report that is issued gives you a listing of all the transactions that have occurred on the accounts that are connected to that agency. So you have a whole list of reports. Also, it gives you the opportunity to have the statement sent, the tax forms, all of those things on the ABLE account can be sent to the agency for supporting that person and those ABLE accounts. So it really provides you with an opportunity to help the person and to keep track of this. I would ask if there is anything that the folks who are currently working with us in this process would want to add to this, because it's really an opportunity for the agency to just submit an application, provide some opportunities for the people that you support to know that there are other opportunities such as trust. It's not just an ABLE account, and that they're not obligated to have an ABLE account just because the agency is working as this entity as an ALR with Maryland ABLE, and then just secure the limited power of attorney for the people who are going to have ABLE accounts and open those accounts. And our program manager takes care of all the back end. They take care of making sure that the entity is certified as an entity and verify the identity of the people that the agency identifies as agents. They make sure we have a paper trail to corroborate this information. So for audits, through the Securities and Exchange Commission, and that's all there. And then if you have to make a change, and we have entities, a couple of them, where one of those agents, one of those people have left the agency, and then it's just a matter of filing a paper with us, and we make those changes, and then there's a new person on the account. And that's also much easier too, because then you can shut that person's access off very quickly, and we can put a new person on. Whereas if you are just identifying a person within your agency to take on the responsibility of power of attorney, and that person wins the lottery tomorrow and doesn't come back, they have access to those ABLE accounts, and unless they come back and transfer that power of attorney, you have no access to those ABLE accounts, nor does that person. So it could be a really difficult situation for you if a staff person that you've identified is on as the power of attorney and leaves your agency. There's no way for you to get into that account without that person transferring that power of attorney. Whereas if you have established the agency as the power of attorney, if that person leaves and you notify us, we shut off their access and you identify who takes their place. And the leader of the agency, the executive director, whoever is in charge, has the authority to appoint that person. So it really gives you the control as an agency of being able to continuously access that. Donna, I'm not able to see the full questions box because of, so I need you to help me here with all the things that are being said there and some additional questions we might have there.
Okay, we have a question about ALR. How difficult would it be to convert current ABLE accounts that were established prior to ALR to then fall under the ALR once it is established?
It's not hard at all. What we do first is we establish the agency as an entity ALR, and then we just convert those power of attorneys from the existing person to the agency as ALR. And so I was just speaking with a person this week who is like a person in the agency who serves as ALR for a number of people, and they're looking to convert to the entity process. So she'll probably, what we'll do is we'll just have the entity power of attorney, and her name will probably still be on it as serving for the agency, but it will be the agency. We'll just sign a new power of attorney form is all we're going to do to convert it.
Okay, thank you. That's all the questions from the ALR section.
Okay. Are there any other questions that we didn't answer?
Yeah, please retype your question if you didn't get the answer earlier on. We have one. If we are already the rep payee for our consumers, what does the process look like for the consumer?
For the consumer in terms of being the entity ALR?
If you could just follow up and clarify what your question is, and then we'll go back to that one. We have another question. Do you have a best practice recommendation for using ABLE funds upon death?
No best practice fund. Like I said, those funds are can be used for funeral and burial expenses and any expenses that were committed prior to death. So anything that needed to be paid off, anything that the person had purchased, or if there were outstanding medical expenses. We just had a very extended conversation about this on the national level just this week. There's no time, we don't have a time limit at this point in terms of how long, and then the money is eventually turned over to the estate. So, you know, it's still open and available to cover expenses that the person may have incurred during their lifetime. We understand that sometimes medical expenses in particular can come back even as late as a year after they were incurred. So that money can still be available up to that long after the person has passed.
We have a lot of questions coming in. So for this year, we can put unemployment money into ABLE to work fund.
So unemployment money can be put into the standard contribution money, or it could be put into ABLE to work if the person is also going to do some have some actual earnings. Okay. Unemployment can't be put into able to work if the person is not going to have any actual earnings this year.
There's another question about, can individuals and their families have access to these reports too? If so, how? Only through the agency or directly from ABLE?
As the authorized legal representative, you decide where those reports are going to go. And so if you say they're going to come to you directly, then you would be the one to make sure that the person and their family would have access to those reports. Because what is going to happen is the person, or if they have a guardian who gives you permission to be power of attorney, you're going to have permission to be power of attorney over just the ABLE account. And I didn't say that. The power of attorney that you're going to seek is going to be power of attorney over just the ABLE account, to manage the ABLE account. So you would be the one to share that statement. And you can choose to get that electronically or via paper form.
We have a few more questions about where to get the forms for the agency to become an ALR, and do you have one-to-one assistance to help people set those accounts up?
Okay, so that's the tricky thing. To be an entity ALR, you have to contact me because we do not have those forms online. What I ask people to do is I do a training with the small group of people who will be involved at the agency in that process, so that I take you through step by step the forms that we use so that we can have time for question and answer at that point. And then I connect you with our Vice President of Operations, who he and his team handle this specific program at our program manager, which is Someday, a subsidiary of BNY New York. And then we are your primary contacts. Certainly our customer service folks can help you, but I serve as the primary support to our entity program. And I would hope that I can speak and say that I really work to make sure we problem solve for you. I would certainly be willing to give you the names of some of the 17 agencies who are currently a part of this process and let them tell you if we have provided them with good customer service. I would hope that they would give you a positive response to that. But if, it's a process we started a little over a year and a half ago through a beta process, testing process. We've been about a year in operation. But as we've learned things through the process, we've worked through them. But I am the primary contact, and then Johnny Lawson is the person on the side of Someday, and he has a team there that we work through this. So if you're interested, you're going to see my email address, and I'm going to ask you to reach out to me, and we'll get something set up. But we don't put those forms online because they are different than the natural forms, and we do provide you with that one-to-one assistance.
I think it would be a good idea if we send a follow-up email to everyone and let them have your contact information, just as a make sure everyone has it.
Absolutely. Also, if you find that you have questions after this presentation that you didn't get to ask or we don't feel we answered, you can also send me an email with those questions. That would be fine too.
Oh, that's great. Thank you so much. Do we have time for a couple more questions, or?
I'm good.
Okay. Should withdrawals from ABLE account for QDE be made in the same month that the expense was incurred, or in the same month that the expense needs to be paid?
So that's a great question. And for withdrawals from an ABLE account, you can make those withdrawals at any time. And the only exception to that is a withdrawal to pay for rent or mortgage. Rent or mortgage has a special rule, and that is if you are going to pay for rent or mortgage, you must spend that money in the same calendar month that you made the withdrawal in order for it not to be counted as an asset for Social Security purposes. So if you are going to pay April's rent or mortgage and you withdraw it during March, you must expend that money out of the outside account before the end of March in order for it not to be counted as an asset. Any other expense can carry over the month and can carry over several months until the end of the tax year, actually, as long as it is spent on a qualified disability expense and you can show that to Social Security, it will not count as an asset against your $2,000 asset limit. So as an example, if I were to take out $1,200 right now to buy a computer, and I learned that there was going to be a big sale for Easter at Best Buy in April, and I held on to the money until after the middle of April when the sale went, I would not be penalized for carrying that money over. When I said till the end of the year, you have 60 days after the end of the calendar year to expend any able withdrawals from that previous calendar year before it becomes a countable asset.
That was a good example. We have another question. I have a client that would like to purchase a condo. Can she use this money towards a down payment of a property?
Absolutely.
Do you have?
Let me take a step back. I say absolutely. So the question is that support her in her health, independence, or quality of life? I would say absolutely. So I have to put it in that perspective. I'm not supposed to say absolutely, but does it support her health, independence, or quality of life? And I'm guessing the question would be yes. So
That's good qualification.
I get a little overzealous on that, sorry.
Okay, do you have limited power of attorney forms?
Yes, we do. We have a form drawn up that you're able to use.
Oh, that's great. Okay, it was said that a person could provide beneficiaries on their ABLE account. How would they designate them?
Okay. It isn't. It is that the person is the owner of the account and the beneficiary of the account. So the person with the disability is always the owner and the beneficiary.
There's lots of questions about your email. So I'm going to put that in the chat.
Okay, sure.
It's
bmobley@marylandable.org.
bmobley at marylandable.com.
.org.
Oh.
.org. .org.
Okay, I'm sending it to everyone. And we've got a few more questions. It's 10:58. Maybe we can take one more, maybe.
Okay.
How does this work if you are the representative payee and the legal guardian? I have to file fiduciary paperwork with the court each year.
Okay, so if you are the legal guardian of property, then you don't have to do power of attorney. That serves as an ALR.
Okay, here's one. How does the ABLE account transfer from state to state if you move?
Okay, you can choose to roll over your ABLE account to another state program. There are currently 43 states with ABLE programs and the District of Columbia, or you can choose to keep your Maryland ABLE account. By comparing, it might be that ours is less costly. It could be that ours has a better investment product that you like better. We are open for national enrollment, so we do have people from other states who have Maryland Able accounts. It would be up to you, depending on where you move to. So you could choose to, like I said, move it to another state if you chose to do that. We do have some providers who actually have people who have Ohio Stable accounts from the Ohio program, because Ohio opened when the ABLE programs first started. We didn't open our program until 3 years ago, and Ohio was open 2 years before us. And we've had providers who've rolled those Ohio accounts over to Maryland accounts because of A, the tax benefit, and B, because it's cheaper to have a Maryland ABLE account for a Maryland resident than it is for a Maryland resident to have an Ohio account. So you can take it with you, or you can choose to leave it here, whichever you want to do.
Great, thank you. It is 11 o'clock. I think that concludes our webinar. Did you have any final comments before we end?
I just want to, again, thank you all for all that you do to support folks with disabilities throughout Maryland. And I appreciate your continued efforts to keep people safe and healthy and to help them to live their best lives. Thank you for the opportunity to share this information with you. And I look forward to connecting with many of you and helping to provide people with this opportunity to finally save money and have the money for the things that they want and need today and for their future. So thank you.
Great. Thank you so much, Betty Ann.
Donna, thank you for the opportunity to be able to present this information to folks. I really do appreciate it.
Okay, and we'll have a recording of the session, and people will get a follow-up email, and if they have questions, they can always email me also. All right, we're going to end the webinar.
All right. Bye.